All right, so I believe let's just go ahead and get started here. So thank you everybody for joining today. Let's talk a little bit about your benefits for 2021. If you can mute yourself, that would be appreciated. And we will try to keep this open so that Sylvia and I can answer any of your questions here. So as I mentioned earlier, the 2021 benefits for Dasher Technologies, we're not changing anything. So we're still staying with Anthem, Blue Cross, and Kaiser Permanente. None of your carriers are changing. Last year, we had to change to Guardian for the accident and cancer plans, but basically none of your carriers are changing for 2021. So we want to make sure that we give you enough information here. Let's talk about your enrollment site. We've been using that for a few years now, and that is going to remain with ease. So we want everybody, we already sent out the open enrollment. Some of you have logged in and already gone through open enrollment. You can see all the plan pricing, confirm or change your elections, sign your forms, and then you'll notice that you're spending on the $1,200 benefit allowance per month. So let's take a look at that ease portal. So a lot of you have already received this email. If not, you can send us an email. We'll send out a reminder again on that, but basically you should have already seen that. You can go ahead and click start enrollment. Sorry. And go ahead and click on start enrollment. And then you should, yeah, it tells you to, take about 15 to 25 minutes. You can have a little cup of coffee
Steve,
ready for you as well. Yes.
can you go back to that previous screen
Sure.
when they first log in? Right here, the dashboard. So I want everybody to notice that when you first log in for open enrollment, it will first show you your 2020 current benefit elections. This is not what's going to be effective 1/1. As Steve indicated, you need to, up at the top bar, open enrollment, and click start to make your open enrollment elections for 2021.
Absolutely, absolutely. These are your current elections, and I'll show you at the end too that it doesn't change your dashboard. That just shows you what you currently have. So you definitely want to click on start, hit continue, go through your benefit profile, make any address changes that you need to, and then at the very bottom, click continue, and then you'll get to your benefit, your dependents as well, okay? Go ahead and list your dependents here, and you will not need to, you haven't enrolled them yet in your benefits so far, you just list them there and that's okay. None of the benefits are tied to each other. So you could have medical for family or single and dental for family, whatever you need there. This just tells you that you have a benefit allowance, and over here looks like your shopping cart of everything that you would have had. So first thing to do is you're going to click continue. We know about our benefit allowance. All of the screens work the same way. You just basically toggle on and off the enroll button, and you will see that the each person in your profile is listed there, and you would specify your coverage. The medical is the biggest screen available. So each plan has all of the documents. So when I click on the plan summary, you'll see your plan summary for each of the plans. So there's a lot of documents associated with each of the plans. We have a lot of plans to choose from, whether it's Anthem or Kaiser. So this screen runs, pretty long for the medical. So you definitely want to take a look at that and what the cost might be associated with each of the plans. Of course, if you're enrolling just by yourself, you would need a reason for a waiver. So I'm going to say that my spouse has spouse's group plan, and that my child, I'm going to enroll my child on the plan. And then basically I see what my cost is. This is showing a monthly screen here, showing what it would be against the $1,200 allowance. Let's just say I want to waive my child, because my child is covered on my spouse's group plan. I see what the cost would be for any of the plans, and then I'm going to select, let's just say I select here I'm in California, so I'm going to select the Kaiser plan, and then I'm going to click continue. So in regards to the program itself, whenever you're talking about your medical plan, you always want to look at some of the key features. What is the deductible, the amount that you have to pay each calendar year? We have a January 1st open enrollment date. So basically it matches the deductibles because those run on a calendar year. Your co-payments are flat fees that you pay for things like doctor visits and prescriptions. Co-insurance would be where you share the cost with the insurance company. It's usually a percentage of the cost. You might pay 10% or 20% of the co-insurance amount. But when it's all said and done, it's the out-of-pocket maximum, the most that you would have to pay in a calendar year for services. This includes your deductible, plus your co-payments, plus your co-insurance. The premiums, as I mentioned, when you go through the portal, you select each of the plans. Each one of them have a different premium that's totally separate than the amounts you pay for the actual services themselves. Okay, so it's just important to keep these terms straight. Our benefit guide. So we do have that available in the portal. I'll show you where that is here in a second. But when I take a look at that, I see that we have a number of different Anthem plans. The first one being an HMO. Most people take the Kaiser for the Health Maintenance Organization plan. But we do have one within Anthem where you would pick a primary care physician from a certain medical group and stay within that medical group for services. And here you can see, yeah, like I said, I mentioned the deductible is very important. You can go through your list of co-payments for doctor visits, labs, hospitalization, and surgery, but you eventually get to the out-of-pocket maximum. So the most important figure here, $2,200 on this particular plan. How would you get there on this plan? $300 a day, up to 3 days in the hospital. That's a $900 per admittance co-payment. Still pretty hard to reach that. But let's move right over to the PPO, a preferred provider organization, where you don't have to choose a primary care doctor. In my opinion, you really do need to stay inside the network. These columns just show you what the in-network coverage is. When I clicked on that benefit description, there was in-network and out-of-network columns, but basically for us to tell you how much you might have to pay worst case scenario, we really need to keep it to an in-network scenario. So for covered services in the network, starting with the Platinum plan, which a lot of you do have, it's a $250 deductible. The Gold plan has a $500 deductible. But on this plan, on these two plans, the office visits and the prescriptions are covered prior to you meeting the medical plan deductible. You'll see on the Gold plan that there's a separate prescription deductible that would apply to their tier 2 or tier 3 medications. So you have to look through each plan summary to figure out, what the co-payments are. But worst case scenario, I know the general highlights of the Platinum plan is a $250 deductible, and then 90% coverage for hospitalization, labs, x-rays, surgeries, until the member pays $4,000 out of their pocket. So basically with this plan, you pay your deductible, you pay 10%. You don't pay 10% on a $100,000, $500,000, $1 million claim. You pay the 10% up until you reach your out-of-pocket maximum, which is $4,000 in a calendar year, at which point Anthem would pay 100% for all of your services in the network for the rest of the calendar year, okay? And then, so when you go through the portal, you'll know that, sure, I have a lower price for a higher deductible with possibly more co-insurance. The Gold plans typically cover 80% instead of 90%. And the out-of-pocket maximum does increase dramatically. Now, if you don't get to the maximum, you don't pay it. So that's just your ceiling, the most that you would pay in a calendar year. If you only had $1,000 worth of expenses, you paid a $500 deductible plus 20% of the remaining balance. Therefore, that's $600 out of your pocket on this particular plan. Okay, so those are your PPO traditional plans on that. And Sylvia, yep.
Yeah, just want to touch real quick on that tiered prescriptions. If you notice, The prescriptions have been divided into tiers, tier 1, tier 2, and tier 3. If you look at tier 1, you will get the most benefit if you go to contracted preferred pharmacies with Anthem, and you will get the lowest cost possible for your prescriptions when you go to like CVS, Target, Walmart, or any of these listed providers. You will get the most benefit from your plan or your level 2 pharmacies, Walgreens, Rite Aid, or Giant Eagle. So now they have tier levels, and this is the one where you're going to get the best benefit for your prescriptions, the most coverage. So check out the levels of coverage, and if you have any questions, you can always call the pharmacy or visit the anthem.com member site to compare pharmacy prices.
Yeah, great. So it looks like for 2021, Anthem is now the first carrier that we know that actually probably pinpointed which pharmacies are more expensive to them, really, and have made it where the member could stay with the lower co-payments with one of their preferred pharmacies. This is still in the network. Walgreens, Rite Aid are the main ones around here that we have to look at, but you might have to pay those higher co-payments. So look within the plan to see in tier 1, whether it's a level 1 or level 2 co-payment. So that's also new to look at. Okay. For those who might say, I want the lowest possible price, we do have a couple of plans that are compatible with the health savings account. And the higher on the deductible you typically go, the lower it would cost you in the premium. So some people have families that they want to cover, and the health savings account approach might be that way to go. So both of these plans work the same. On an HSA plan, the deductible applies to basically every service except for preventive care. So office visits are not covered on these two plans until you reach your deductible. The silver plan has a $2,000 deductible. The bronze plan has a much higher $6,950 deductible. Looking at the silver plan, you pay your deductible, then you have 70% co-insurance, you pay 30%. Once you reach $6,750, that includes the deductible, then you go to 100% coverage. The family deductible is $4,000, and in parentheses, that just means that one person cannot pay more than $2,800 of the $4,000 deductible. But more importantly, the out-of-pocket maximum, the $13,500 for a family, one person cannot pay more than $6,750. So the individual amount applies within the family, but much more out-of-pocket to begin with, great coverage after the deductible. You'll just note that it's the lowest cost premium available for you, especially if you need to put on your family members. So very important, because I know we do have a good number of people on the silver plan and even a few on the bronze plan as well. The bronze plan is pretty easy. $6,950 is the deductible. So this should be the lowest cost premium plan for you. There's no charge after the deductible. So basically you pay your deductible, Anthem pays the rest. So very, very simple program. And with that, with the health savings account plans, some people have said, hey, with an HSA, you can fund your own, pay the lowest amount of premium, put a few $100s a month into a health savings account, which is just your personal account. You can use tax exempt money to help you pay to fund it. And then you can pay for your medical, dental, and vision expenses through your health savings account. So I have an HSA, I fund it myself. And I felt that that's financially a better way for me to go for my family. That's a lot of information, obviously. So we just want to make sure that you know that Sylvia and I are available to help you with your personal scenarios as it comes up to you and your family and what you might want to do with your strategy for 2021. So during open enrollment, you're obviously welcome to give us a call. And even throughout the year, we'd like to answer these types of questions for you. So everyone has individual access to us. We'll show you our contact information.
Hey, Stephen.
Yes, question.
Could you just give us a quick testimonial on your experience with HSA administrative effort on your part?
Great. So with the health savings account, all I do is I use HSA Bank. That's one that is pretty well set up. I have an account with them. I fund my account, and with that, I have to, any activity in the HSA, my deposits, I then have to add a tax form to my 1040. That's Form 8889. So I put in the maximum. I have a family. I want to put in $7,200. When I do the math, if I'm a Dasher employee, I'm saying, hey, wait a minute, why would I pay for the platinum plan? I looked at the cost for my family. It's $1,500 more a month. I'd rather take the bronze plan and fund $600 a month into my HSA. That's just me. So you do it mathematically, figure out what's best for you. That money you put into a health savings account, you want to make sure that the deposit, not the spending, but the deposit is an above the line adjustment to your federal income. So not for California, there's still state taxes. You can't deduct it from your state income, but you can deduct it from your federal income. So first things first is you do have to account for the money through Form 8889. So that's the bookkeeping part of it, is it's in your best interest, because that's where you would take an above the line adjustment to your federal income for the amount of money that you put into your HSA. So first thing is what goes in. The next thing is what comes out. You can use it for any qualified medical, dental, or vision expense. So with that, on that Form 8889, you then list, oh, I took out the bank is gonna send you a statement saying how much came out of the account. Let's just say I took out $1,200 for any of the, $1,200 came out. Now, did those come out for qualified medical expenses? It's my money at all times. I can use it for non-medical expenses, but I would have to pay a 20% penalty on those dollars for non-qualified expenses. I don't worry about that. I just leave the money in the account. I know I can use it for anything I want. I've used it before for laser eye surgery. So to answer the question there is, first, you want to have a tax form for what goes in and what comes out. My bank, HSA Bank, actually allows me to upload my receipts right into my member profile, and then I can pay myself back as I need to. So you can take it to whatever extreme you need to, but if you use the money for qualified medical expenses, you put that total on your Form 8889. You want to keep those tax receipts for those expenses in case you are ever audited by the IRS for those qualified medical expenses. I haven't heard of anyone of that happening to anybody, but basically just a little bit of accounting work to do on your end. Okay.
When you say a little bit, I want to recap that, because it sounds like it sounds like a little bit of work you have to do, primarily on the upfront, but also ongoing. When you upload the receipts, you have to upload all your receipts, right? Because when I used to be part of the HSA years ago, it was automatically taken care of, but it sounds like that's not true anymore.
You don't have to do anything. I advise that you can do it with your, well, I use HSA Bank. You can get an HSA pretty much anywhere, Wells Fargo, wherever it might be. So with that, you don't have to do anything. I advise that anytime you spend the money from your health savings account, that you keep that expense in your tax folder, because that's the year you took out the money from your HSA. That is what needs to be accounted for. I just upload them into my member portal just so they're there. But like I said, everybody kind of takes it to a different extreme on what they need to do with the HSA.
So Suzanne, I never upload my receipts, and if I get audited, I'm going to have a nightmare to deal with it, but nothing happens if I don't upload them.
Okay, and for each transaction you want to make, there is an effort that you have to put in for that reimbursement, so to speak, to pull money from the HSA. It's not something automatic.
Great. Depending on where you go, the health savings account usually comes with a debit card. So you could just pretty much, if you went to a pharmacy and said, my money's in my HSA, you swipe the card and that's basically it. So, it's a checking account, basically. Whatever's in the account is what you can spend. So that part of it is really up to you on how you do it. Some people just keep their receipts, paid cash, pay themselves back. There's a lot of ways financially, everyone has a different way of keeping track of this on there. I upload all my receipts. I just leave them there, and then I'll say, hey, I didn't pay myself back for this one. So I've taken it to a different extreme where I use my credit card, where I get points for when I go to the pharmacy, and then I reimburse myself. So I never use my debit card for my HSA.
Gotcha.
So it just depends. Everyone financially has a different way of doing this. Mhm.
Gotcha. And I think it's important to note that I went through this exercise of looking at these qualified medical expenses, and in my case, they didn't cover some of what my qualified medical expenses might typically be. So I think it's important to note that you need to look through that list carefully before you make that decision to make sure that
Susan, yeah.
whether or not your typical expenses would map to one of these qualified expenses.
This is a partial list. Thank you. The full list is publication 502 on the IRS website. It's like a 30-page PDF. So since the money never expires, you keep it. There are no use it or lose it rules. A lot of people just say, hey, I'm going to leave it in there. I don't need to be an expert on everything I could use it for, because technically I'm saving money up and it's going to be there when I retire. I have aging parents, so I now know the need for long-term care. So I'm funding my account as much as I can because eventually I am going to need that money, maybe for prescriptions and dental visits. Great. But I'm more worried. I have a long-term care policy, but I also want more money because my long-term care policy I can see isn't going to cover that much when I eventually get there. I'm turning age 55 this year, so I can add $1,000 into the account because I'm going to make a catch-up contribution. So I'm a family. I'm going to put $7,200 in there. Guess what? My spouse is going to be 55 this year, so we're going to open up her a separate account, make her another $1,000. So I'm looking at $9,200. I'm taking it to the maximum I possibly can. That's a lot of strategy. And that's where, yeah, let's take that one offline to help you with your particular situation.
Interesting. So if I understand this correctly, you're using it, if I recall my acronyms, you're using it as a sort of RMA, where you're
Perfect.
saving that money for future use.
Absolutely.
Interesting.
Absolutely.
Okay.
That's how I'm particularly doing it. A lot of people say, no, I just want to get enough money in there because I want to get laser eye surgery done, or I want to pay for my kids' orthodontia expenses. Great. You can do it however you want. So like I said, that's where the financial strategy comes in. And I've taken it to the extreme where I now put the money and I'm trying to, I bought some stock in Amazon a few years ago, done pretty good with that one. I took some stock in another one of my clients, lost a little money on that. So it just depends. So lots of strategy. That's why I say with the next, we'll take that offline and make sure that you have, everything you need to do, possibly what I do. I'm not just your broker, I'm a consumer. So that's where I've learned a lot just being a consumer on these
Great,
plans.
thank you.
So,
Thank
Yeah,
you.
no problem at all.
why do some of us not have an option for an HSA?
You have to take one of the plans that's associated with a high deductible health plan. So that's the rule, is you want to look at the one that's with a health savings account. When you have a health savings account, there's rules
Well,
on.
but I don't live in California, so you don't give me that option. So
Yes, you do. Sure you do. Sure, you have two options. So anyone who's not in California, you have the Anthem Bronze PPO, that's national. And then you also have a silver. These, I wish this was listed differently, but if it's in alphabetical order. So the silver plan here is also HSA compatible. Every single employee.
Well, that's what I have. That's the one that I have, but I have never seen the option. It doesn't show up.
It's not within the portal. So you need to know, understanding the health savings account of what you can do. So you would open up your own. We don't do it through payroll deduction. Who's eligible for it is anyone covered by a high deductible health plan, who is not on Medicare, not on another plan, and not.
I thought the whole idea of this was to make it a one-stop shop, that we didn't have to go and mess around with all this kind of crap.
It just hadn't been done through payroll deduction, but great feedback. So Michael, if we wanted to, that's another issue of people who have who want the health savings account plan. possibly we can add that within ease for them to make an election through payroll. That's something that we'll talk to the management about. But that's just, yeah, something where you can do it through payroll deduction as well. That's another step in our process. So.
Yeah, Steve, how is it currently done? I know we have some employees that are currently taking advantage of the savings account option, and
Right.
how are they
We
doing that
technically,
right now?
great question. We have about 15 or so employees who have chosen a health savings account option. And when you do that, well, we can talk offline again with that, but basically the next step would be is someone would just say, I'm eligible for an HSA. I go to Wells Fargo, Bank of America, Technology Credit Union locally, or HSA Bank nationally, whatever it is, and open up a health savings account. The rules are all the same for the HSA, so there is no difference. Those are universal rules. You just go open a health savings account wherever you are. Technically, they can fund it on their own with post-tax money and take an adjustment to their federal income to recover those taxes at the end of the year. But Michael, we could talk about possibly saying, hey, if we did it through payroll deduction and send it to the bank directly, then the money can come out initially as pre-tax dollars as well. So some of my clients do it either way, but basically it's almost like
more sense than loaning the IRS money.
I like it.
Which plans in the portal do qualify that don't have the with HSA listed?
So for those nationally, it's the silver PPO 2000 and the bronze 6950. Those are the ones that say HSA compatible. Mhm.
And that's a federal rule, right, Steve?
Federal rule, like I said, for those in California. So anyone outside of California, other than New Jersey, is pretty much, if there's state taxes, you're making a write-off on an adjustment to your federal and state incomes. In California, I make an adjustment to my federal income only on that. Mm-hmm.
So there's two options only.
My question is more around the reason why there's only like the lower level plans that are eligible, because that's a federal rule.
Correct. So there are things that make a plan HSA compatible, and it has to have a certain amount of a deductible over $1,400. It's a weird amount. Here we have a 2000 and a 6950. And then the plan has to not cover, see, your office visits are covered prior to any deductible listed on a regular plan, but on an HSA plan, only preventive care is covered first dollar. Everything else is buried behind the deductible. So you have to have first a high deductible health plan that qualifies you for a health savings account. Mm-hmm.
So would it also be advisable for employees to shop around with different banks, because different banks have different fee structures?
Absolutely. The reason why I use HSA Bank is I have a nice balance in there, and I noticed on their HSA that if I kept like a $5,000 balance in mine, that they wouldn't charge me it was low anyway, $2.50 monthly fee. Some banks have a higher monthly fee. It's like a checking account fee on that. So yes, every bank might be different, and that's up to you. The rules are the same, so wherever you go on your own is fine. But Michael, we can talk about possibly opening up an employer side of things with, I would advise HSA Bank is my favorite.
Can funds be moved from one HSA bank to another HSA bank?
Absolutely, they can. Absolutely.
So I've switched a couple of times while I've been at Dasher HSA accounts.
Mm-hmm.
And you just talk to Melissa, give her the right information, the account numbers, and she sets it all up on the Dasher side of things. It's pretty easy.
Oh, so hang on a second. Michael, do you know does anyone have payroll deductions taken out?
I do.
Yes, I do.
Then I
Yeah, I
apologize.
thought that was already going on. Yeah.
Okay, I apologize for that. Then Sylvia and I will build it in there as well for anyone to show the screen, because I don't think it was going to an HSA screen after that. So if I chose the HSA, let's just see here. I got my test employee. Let's take that HSA.
Yeah, it doesn't go into any kind of HSA scheme.
Got it. Okay,
very
so
cool.
I apologize for that. We'll definitely get that added in there where you can continue or make your pre-tax contributions to an HSA then as well. Okay, through payroll deduction. Okay. Absolutely. All right. So in regards to that, first of all, we know that all of your medical plans had a lot of out of pocket on the program. So let's just kind of we'll get there. Let's just finish up with medical as well. And Sylvia, you want to talk a little bit about Anthem and Kaiser?
Sure. We highly recommend that anybody enrolled in the Anthem and Kaiser plans, each one of the carriers, they have their own mobile app that is very useful. When you register at the anthem.com/CA, you can you can have access to your ID card right away and carry it with you on your mobile app. You can look for contracted doctors and pharmacies. You can also view the claims that are submitted and how they are paid out. You can see your explanation of benefits online and see how a particular service date was paid out to your doctors, etc. You can also compare cost of future upcoming procedures. It's a great app to have on your phone in case you ever need it, and that way you can't ever say, I lost my ID card, how do I get one? So we highly recommend that you sign up for the mobile app. Kaiser has their app as well, mobile app. We highly recommend that if you can also log in kp.org and sign up for your member portal. You can schedule and cancel appointments. You can view your lab results like 24 hours later, 48 hours later. You can email your doctor with non-urgent issues. They're very good about emailing you back. I'm a Kaiser member. I've been a Kaiser member for years, and I see my results right away, my lab results, and I also have access to my vaccination records. When was the last time that I had a vaccine, or do I have one due that's coming up for me to retake again? If I need to have a prescription refill, I can also request to have it refilled online. It's a great member portal for where all of your information is listed on there. We highly recommend that everybody sign up and of course, download the mobile app. So Kaiser is for California employees only. And as Steve has mentioned, Kaiser, remember, they have their own installations. It's great. You have all of your medical services provided for you in their own facilities. The Kaiser Platinum 20, it's a great plan, no deductible. You have all the plans provide preventive care at no cost to you. You have your physician visit, which is about the only thing that's changing on this plan for 2021. Your physician visit is going to $20 and your specialist $30. Remember, your co-payments, they accumulate towards your maximum out-of-pocket exposure for the calendar year at $4,500 for a single person and $9,000 for family coverage. You have your set co-payments, your hospitalization, $200 a day up to 5-day maximum, and your prescriptions, $5 for generic, $20 for brand. It's a great plan. You have the Kaiser Gold HMO. It's $250. The physician $50 for an individual coverage and $500 for family. Your physician visits, it's going from $25 copayment to $35 for your primary care physician visits and $55 for your specialist. Everything else remains the same. Your highest expense is a hospitalization. It's $600 per day up to 5 days after the deductible. And so your maximum exposure for the calendar year is the $7,800 for a single person and $15,600 for the family coverage. All right. Your silver HMO 1650, you have the deductible for a single person and $3,300 for a family. Your physician co-payments is $55 for a single for the office visit and $80 for your specialist. After that, you have your hospitalizations, your outpatient surgeries, emergency room. You pay 40% after you pay the initial deductible. And then on this particular plan, you do have a prescription, a separate deductible on prescriptions of $350. And after that drug prescription is paid, then it's $20 generic medication copayment and $75 for brand medications. Again,
Sylvia, what I mentioned, what I look at on these 3 plans is that it's still pretty hard, especially on the first 2 plans, to reach your out-of-pocket maximum, because the highest copayment I see here is $250 per day. So $1,250 for a hospitalization is what it will cost you here. And that's just, you know, you go into the hospital for a week or whatever it is, you still haven't paid $4,500 out of your pocket. And likewise for the Gold plan, $7,800 might be the maximum, but I see here that $600 a day in the hospital for 5 days would cap at $3,000 out of your pocket. So a little bit harder to reach. You don't just automatically go to the out-of-pocket maximum on these particular plans, but you could on this one because it's 40% after the deductible as well.
Right.
All right.
Yes.
Yeah.
Yes. Thank you.
Yep.
Thank you
Yep.
for that. Yes.
And then we just have an HSA plan that's also available with Kaiser. So not, you know, same thing as a silver plan as well. So pay your deductible, then co-insurance, and then an out-of-pocket maximum. So it could cost you that $68.50. So obviously Kaiser's available for those of you in California. So any issues or questions on Kaiser? Right. All right.
Just one last thing.
Sure.
That remember on the medical plans, all of the deductibles and the maximum out of pockets, they do run on a calendar year basis, and so they will get reset again on January 1.
Great.
And we start
Excellent.
all over again, accumulating.
Excellent. Yep. So all of these out-of-pocket maximums, very, very important on any of the plans. And we have installed even accident and supplemental accident and cancer plans years ago. And we've had Guardian now. So basically with the accident plan, I really like it for myself and my family. I have a high deductible plan. Even if I didn't have the high deductible plan, I still know I have exposure on that. So it's great to know what this plan pays for, which is basically for injuries or accidents off the job. It pays separately from what your insurance company pays. So you get a broken arm, it's covered on Kaiser and Anthem, fall off your bike or whatever it might be. But it's nice that you get extra money from Guardian in this case for whatever might happen to you as a result of an injury. But before we even go there, when I add up the monthly premium, I see that it's about $183 a year. I know that there's a wellness benefit that does not require an accident, which covers $100 per person per year. So when I go over to the benefit summary and I look at, you know, how I can get money back for the wellness tests, I see that immunizations is one of them. So I'm going to go get my flu shot, hopefully today, maybe. Then I know I can call in to Guardian and say I had my immunization done. There's an 800 number for Guardian. They even have a claim form if you need to, but I know that they actually take that over the phone where you can call and say you had your flu shot and they will send you a check or direct deposit into your account. Actually, I don't think Guardian does a direct deposit yet, but send you a check for the $100 for that immunization. So that's the best part about it is I like these plans when I discovered that a good more than half of the money that I spend out of my paycheck is actually given back to me if I submit my wellness claims. And like I said, that includes a flu shot. So it makes it great whenever I get to a real example of an accident that might happen to me. Here I got one about John walking in the park and, you know, fell down, tore some cartilage. And I see here all the benefits that he would have received from Guardian. And on this particular accident, it's great. He would have got over $4,000 sent to him. That helps him with his out-of-pocket on his health plan. If he already met his out-of-pocket on his health plan, he still gets the money. So I love the accident plan for myself and my family. It takes a load off as far as, you know, worrying about how I'm going to pay those out-of-pocket expenses. Okay. And we've added a supplemental cancer plan. Of course, that is covered by your insurances, but this I've also seen help a couple people in our office who, cancer runs in their family. They didn't have any cancer, or they're coming into it without, in the last 12 months, they haven't had, have never really had cancer. There's a 1-year look back on that. But basically everybody can, there's no other medical questions on there. So you can sign up for it, but we just want to make sure that, yes, there is an issue with the, for those who've never had cancer, it's very, very simple. This is just something that you can purchase from Guardian at a pretty low premium that is not age rated. And once again, there's a wellness feature on the Guardian plan, not the immunizations, but a lot of us might do, I do the PSA test. My wife does her mammography. Those are all covered. And I get the $100 back for each of us on this particular plan. So that's another level there. And then here is an example of that where, yes, I in my own office, I had somebody receive about $12,000 from their supplemental cancer plan. So it will come in handy, obviously, when and if that ever happens. So if it runs in your family, it's just something to think about, another option that we have here at Dasher Technologies. So definitely, any questions on those two plans? Right, all right. So just kind of taking a look, we're getting through pretty much everything. Each screen is going to look the same way. So when you over here on the right, you see what your total is, you see what your allowance is. It keeps subtracting from the allowance. So I can go ahead and enroll on this particular plan. I see what happens every time I add or delete a family member. So I'm going to say, hey, this is pretty affordable. I'm going to take it and continue on the accident. And maybe I just take the cancer for myself. I don't believe it changes at all when I add my child, but when I add my spouse, actually it goes up just a little bit. Sorry about that. Yeah, the child isn't that much more for the cancer program. So I'm just going to put myself and my child on that. I might as well just go ahead and put my whole family on it and continue. So basically, that's really how the cancer plan works.
Your dental plan will remain with Beam. We will continue with the same plan. You have a $2,000 annual maximum benefit for each member of your family that is covered. You have your preventive services are covered at 100%. And then if you need to have basic or major services, you will have a $50 deductible, and your basic services will be covered at 90% by Beam, and you will pay 10%. And for the major services, Beam will pay 60% and you pay 40% for major services, which is like crowns, implants, dentures, etc. So remember, you will get the most benefit if you stay within the Beam network contracted providers. It's a great benefit. You do have the flexibility of going out of network. They will pay benefits to non-network or non-contracted providers, and it's also $50 deductible, and 180, 50% is listed on there as well. However, these payments are paid at what is called usual, customary and reasonable limits, which means that Beam will pay whatever 9 out of 10 dentists in the area pay for those services. So you can be balance billed for doctors that are out of the network. So you will always get the most benefit if you stay within the Beam preferred network of providers. Remember, if you're going to have extensive dental services performed and you already know that ahead of time, please have your dental office send Beam a pre-treatment plan so that they can review it and tell you this is how much we will pay for this treatment plan, and this is how much you will pay out of your pocket. That way there are no surprises when you're having a crown replaced and it turns out that you're going to be paying a lot of money out of the network. So we highly recommend a pre-treatment plan be sent to Beam so that you know what your exposure out of pocket is.
Yeah, we recently had a client that actually went in and didn't do that. It's not required that you have to do a pre-treatment review, but they had a couple of missing teeth, which the crown or bridge wasn't going to be covered on a tooth that was already missing prior to the coverage. So little things like that, we don't want to take out any surprises. So it's our recommendation, not required, that you do that pre-treatment review.
Okay. Your vision coverage is through VSP. That's the largest national vision carrier. However, it is enrolled, you enroll through Beam on the VSP plan. VSP will pay the claims for your vision services. You, every year, every 12 months, you're able to go and get an exam at a $10 copayment. If you need lenses for your glasses, every 12 months, you can change your lenses. It's at a $25 cost to replace them. And every 24 months, you're able to switch out your frames. You have an allowance for lenses and frames of $150. And you, in lieu of lenses and frames, you're able to utilize your allowance of $150 for contact lenses every 12 months, if that is what you choose. If you go in and you spend your $150 allowance, you can get up to an additional 20% discount above the additional amount that you spend for your glasses or your contact lenses. Okay, Mutual of Omaha covers your group life and disability. So Dasher pays for group life and accidental death and dismemberment insurance for each one of the employees at a $50,000 amount. If you as the employee happen to die as a result of an accidental death, then your beneficiary would receive an additional $50,000 amount. Okay, so it's at this point, it's very important to remind everyone, if you have not designated your beneficiaries, please do so. That way or if you don't remember who you have designated, please review it, and if necessary, go ahead and update it. The carriers do not need to have your designated beneficiaries. However, you do need to let HR know, so that if in the event that they need to look for a beneficiary, they have it in your employee file.
And that'll be right in the portal once you get through the benefits. Absolutely. Mm-hmm.
Mm-hmm. Okay. You also have the option to enroll in additional voluntary life and accidental death and dismemberment if you feel that you need more than the $50,000 life insurance. If you were to pass away, you can purchase up to $300,000 for you as an employee, and up to $150,000 for your spouse, and $10,000 for your children. If you have not signed up in the past for this voluntary life benefit, you may be required to fill out an evidence of insurability form, just to make sure that there's a few health questions that are asked before you can get approved. Okay. And also, if you're currently enrolled and you want to increase your amount, you may do so at this time during open enrollment. You also have disability insurance coverage through Mutual of Omaha, where your long-term disability pays you up to 60% of your salary if you're disabled, up to $8,000 per month after a 90-day elimination period. And of course, you would first sign up for the state disability, and then once that is over, your disability long-term would kick in with Mutual of Omaha.
Where state disability exists. So California, we
Yes.
pay into state disability there. So, but everybody, no matter what state you're in, you're covered for long-term disability on that. Mm-hmm.
Okay. Through Mutual of Omaha, you have two great additional benefits. The Employee Assistance Program. This is a confidential assistance program that helps you and your dependents with personal and job-related concerns. Right now, 2020 has been quite the year in more ways than one. A lot of people, are feeling emotionally stressed out. Family relationships have been kind of strained due to being at home. a lot of for long periods of time. If you have legal or financial issues, the staff at the EAP program, they are master level counselors, and they are able to assist you, assess your situation, and if necessary, they can help set you up with face-to-face meetings with a counselor or financial planner or attorney if that is what you need. They are available to talk to you 24/7. It doesn't matter what hour of the day or night you call, they are there to assist you, and these calls are strictly confidential. So sometimes, you just need to talk to somebody about the stress, the workplace and your work life, daily living. Sometimes you may be having to take care of your elder parents, you need assistance, help, what resources are out there. This is a great program and assist you with some of these issues.
Great. That employee assistance plan is located in the life section as well, so you can click on that document.
Yeah. Also, when you travel away more than 100 miles from your home, you are able to receive assistance if you need it in finding a hospital, a doctor, replacement of your stolen documents, if you need to find the closest pharmacy, or even emergency medical evacuation and or transportation. These are great programs available to you at no cost to you. I highly recommend that you log in, when you log into your ease, going through the open enrollment, that you print out a copy of these two programs and carry the little or write down the phone number in your phone, so that if you ever need to, you can call them and you already have their phone number at your reach. These are great confidential programs provided to you by Mutual of Omaha.
Great. And then really the last benefit is your flexible spending account. So you can put money away from your paycheck to pre-tax dollars to help you pay for your medical, dental, and vision expenses. So that's just something that's nice as well, up to $2,750. It is use it or lose it. So you have to be careful and plan ahead for what you think you might use in medical co-payments, dental co-payments, things like that. Some people who have a health savings account, we even have at Dasher a dental and vision flexible spending account. So I use my limited FSA as a health savings account person. I used a limited FSA to cover orthodontia expenses for many years. So also very, very advanced strategy. Give us a call and we'll tell you there. But yeah, it's not a rollover. All the funds have to be used. Dependent care FSA, doesn't matter if you have a health savings account or whether or not you take a flex plan. You can also use pre-tax money to help you pay up to $5,000 per year if you and your spouse both work and you have kids in daycare, things like that. So this year's been, all over the board with that, but some people, still might need that. And you can use pre-tax money as well to help you cover those expenses. So those are the benefits. We want to get through the process here. Like I said, all the screens work the same way. You just go through all of them. You make your election. You're automatically enrolled in the life and disability. So there's no waive button on those. And then eventually you're going to get over here to the healthcare. If you do take it for the FSA, you also want to make sure you put an election. So just because you click enrolled, you haven't elected anything. Let's just say I want $1,000 a year to go into my flexible spending account for medical. I go ahead and see what that's going to cost me per month is how we have it listed there. And also for the dependent daycare, I'm going to waive that and just leave that where it is. As Sylvia mentioned, a beneficiary is very, very important. So for the plans that I have elected as my test employee, I want to make sure that I have 100% in my beneficiary column. If I need to add or change my beneficiary to a trust, I can add that as well. So keep this updated. If you wanted a contingent or secondary beneficiary, that's optional, but just make sure these columns equal 100% there. Then you go over to your summary. It's going to tell you everything that you have elected so far. And that's at the very end. It's going to tell you how much you have used. Hey, I've only used 874 of my 1200. Maybe I'll go back and add more into the cancer or other program or adjust my medical plan. So it just depends on each person. The signed forms at the very end. We're not changing our carriers. Yes, this system does generate all of the forms, so it does ask you to sign those. We may or may not need to send those to the carrier there if you're not making any changes. It still generates those. It works just like a DocuSign. So first it's going to ask you to type in your name and then maybe give as close as you can a signature there. And then it's going to tell you how many signatures are remaining. You could just click in the box. And my screen might be jumping ahead of yours. I apologize. I just want to get through this quickly. I click on all the green boxes. And eventually I see at the top how many signatures are remaining. 4 more. I just click through there. And then on our end, we will look at all the changes after open enrollment, and you click finish signing, and then we'll send each form to the carriers that we need to. So you are now done with open enrollment. You can click on finish. And as Sylvia mentioned before, this is your dashboard. This is still 2020. Don't panic. You went through all of that effort to do it. What you just enrolled in, you click on benefits, and then that is where the information is going to be for 2021. And that's everything that you signed up for. And then once we get into 2021, your dashboard is going to show all of your 2021 benefits. Okay, so there's a difference between dashboard and benefits. What's going to go away after open enrollment is this top banner, but you always year round would have access to your benefits and your documents. So we are going to take a look at your benefit guide is already listed in there, so you can take a look at that as well. So that's really everything there. We are also about to unleash or show you a mobile application that we're building for you as well, which is going to contain the benefit guide and a lot more information. So more on this is going to come from Michael as well before the end of the year to give you more information on our new program, which is Strive, which is a mobile app, which is going to have a lot more information in this day and age, where a lot of us work in mobile and things like that. So we want to make sure that you, the Dasher employee, are taken care of as far as being able to contact us or have information at your fingertips on that. Okay. Great.
Steve,
Yes.
we have a question.
Sure.
There are HSAs that aren't the Kaiser HMO.
Yeah. So in the chat there was that. Yeah. On the Kaiser plan, we have the HSA plan. There's one HSA plan, and then 3 that are not part of an HSA. So you definitely want to take a look at that benefit guide. That it was that 4th column that was an HSA plan. Right. At this point, are there any other questions from anybody on the call? And of course, our contact information is here because maybe it's a question you need to ask about your personal benefits, and we'll be happy to answer those. Great. And Michael, did we miss anything else that you needed to share right now? Excellent. All righty. Well, I believe that's everything we needed to go in just a few minutes over. Sorry about that, but we want to make sure we got you enough information as we could in this hour. So thank you very much for all of your time. We really, really appreciate it. Continue with your open enrollment. For those of you who have not gone through open enrollment, we're going to send out another reminder. For those of you that have gone through it, you won't get that reminder. So there you go.
And
Excellent.
happy Thanksgiving to everybody. Have a great holiday. Bye-bye.
Thank you.
All righty.
Thank you.
Bye.
Thank you, everybody. Take care.
Bye.
Thank you.
All right. Bye-bye.